All right, so Dan, let's give you your mortgage minutes. So let's click the little button to make you fancy announcer guy talk.
Welcome to this week's Mortgage Minute with Dan Keller.
All right, well, I'm going to open up this week's Mortgage Minute with my MLO number again, because we cut and splice these. So I am a mortgage professional with New American Funding, a mortgage loan originator with New American Funding right here in Kirkland. My MLO number is 115349, and although I'm not going to be talking about mortgage rates specifically, there's a lot happening in the mortgage industry. So I think we've covered this plenty of times, so we don't need to go into depth, but we all remember in November during the election, rates were in the mid to upper threes. Let's just talk about 30-year fixed rates. In the mid to upper threes. And literally right after the election, they went up a full percentage point. We had no idea that was going to happen.
No one thought that was going to happen.
Nobody thought it was going to happen. And so anytime you see, and I've learned this over the years, anytime you see a massive spike or a massive fall, it's typically a knee-jerk reaction to something. And, I kind of was optimistic, as I am all the time when it comes to stuff like this, that, hey, just relax, it'll come back. Well, it didn't really come back right away. It took some time. But I came out about 2 weeks ago on my weekend Making Sense of the Market report. It's a 2 to 3 minute video that I sent out to our clients, past clients, friends and family members, and I basically showed a graph, Christian, and we talked about it on the show probably a week or two ago. But we're back. The mortgage market is actually back. We've regained about 50% of our losses from when rates went up a full percentage point. So that's good. Now, there's a lot happening in the media right now, or not in the media, in the obviously with the change in power, obviously with the president. He's made a couple changes right away, and we kind of made a joke of it the other night because it was like one of the first things he did within hours of getting elected, Trump, and
getting sworn in.
His administration reversed Obama's ruling on HUD, the changes that they just made to HUD, lowering the private mortgage insurance, making it more affordable for home buyers with FHA. And you and I are like, of all the relevant things right now, that's probably like
number
way down.
100 out of 100 items that you should do. That was like number 99 or 100.
Yeah, focus on a few other things we don't need to talk about because I don't even know what they should focus on. I just know that it wasn't that important. However, it created a lot of attention online. There was a lot of facts. I think facts were misinterpreted. USA Today, you actually brought it to my attention and announced something. I'm like, oh, wow, this is wrong. And so we kind of corrected it online and everything. But my point in saying this is, yes, Trump reversed Obama's ruling on that. But here's the thing. They're doing a full audit. We're going to see the findings probably here in the next 90 days. And hopefully it's, I don't know, how do you repeal something that you repealed, but most likely we'll see something
they re-implement
Obama's,
there you go.
And maybe even some more positive changes. So that was the first thing I wanted to talk about. The second thing is CFPB. So the CFPB stands for, and I know you love little acronyms. Is that what that's called? It's the consumer, and it's a really great organization, I think. And I'm not just kissing tail right now because they could come after and they audit loan officers and real estate agents. But the CFPB is the Consumer Financial Protection Bureau. And what it does is it's designed, it was a part of the Dodd-Frank Act to protect the consumers when attaining financing, whether it be credit cards or auto loans or home mortgages. And so another announcement about a week ago, the Trump administration said that they're going to make a big push to repeal the Dodd-Frank Act. Well, that's what the media said. They're going to try to repeal a part of the Dodd-Frank Act, which probably has nothing to do with the CFPB, which I hope they don't do that because I really I love what the Obama administration did to the mortgage industry. They tightened it up. They made it very difficult to get a mortgage. I think that's healthy. I think that was good. They made the barrier of entry
much harder.
Or rewarding. Rewarding when you actually get your approval and you get to buy a house. It should be a big thing, a good thing. So I hope they don't touch that. Because here's the other thing, too. If they loosen those guidelines, what's that going to do? It makes my job less valuable. And
but it also could potentially hurt the real estate market long term.
Hurt it again.
Because you're going to let in people that really shouldn't be buying a home. And that's not good for the market. We need the strictness that's in place right now.
And I'm all for maybe them loosening up on underwriting guidelines, but not guidelines as a whole. So we'll keep you posted on that. But I want to get back to my point. I think the part of the Dodd-Frank Act that the Trump administration is really going to push to repeal is the Dodd-Frank Act gave it took a lot of the power away from the smaller banks. and gave it to the big four that we gave money to during the crash,
to help them. Yeah.
Yeah. So I think what they're going to do is to try to give more power back to the smaller banks so that they can lend more money to small businesses, which then in turn creates jobs. So that's just from the research I've done on it. That's what I'm seeing right now. So we'll see.
We'll see. We'll keep you updated as time flies, but we'll see.